Hi, everybody. It's Warren Kinney with DailyOptionsTrade.com for July 6th, 2012. I hope everybody's doing okay. As I often do with these talks, I want to start with just checking out what's going on with the market overall. I like to do that because then, as I look at specific trades that I might be thinking about, I can say, is that trade or is that the movement of that particular stock that day a reflection of something that's going on with the markets overall, or is this something that is specific to this stock? And one of the opportunities that occurs is sometimes you'll have a stock that tracks closely what the Nasdaq or the S&P are doing normally, and then some event happens, it loses that synchronization, and then it tries to resync. And that resynchronization process is sometimes a very cool opportunity for a trade. And I want to show you one of those today, but let's start by just looking at what the market's doing overall. I've got up here the Qs, which is an index tracking the NASDAQ. And you can kind of see that, with general economic news starting in sort of April timeframe, things were drifting down, right? And then we started to come back up again. And then the news in Europe sort of affected what was going on. So the whole Greece crisis and the Spain crisis, and stocks started to drop. And then we heard that Europe was going to move more aggressively into fixing that problem. And logical or not, we can talk about that. The stocks in general started to drift back up. Today, you see a significant drop. Nasdaq is down what? Not quite 2% on the day. And that's because a manufacturing report came out and an unemployment report came out, both of which were negative today. And so, stocks are taking a hit, but they were frankly a little bit oversold anyway. I'm sorry, overbought. And so we were sort of, from just technical analysis, expecting a drawback here. So that's not too surprising. Let's look at the S&P. We'll do that just for convenience sakes by looking at Spider's fund, which tracks the S&P index, and you see a very, very similar pattern, right? Slowly the trend is coming down, and then it goes back up. The Europe news hits, it comes down, we jump back up again, and today we've got a fall off. Now, the stock I want to look at today for a trading opportunity is AutoZone, and the ticker symbol for that is AZO. So let's pop over here to AutoZone. And what we see with AutoZone is a very similar trend to what we saw with the NASDAQ and the S&P. Things are drifting down and then they start climbing back up. But whereas with the NASDAQ and the S&P, they continued an upward trend, we see this dramatic drop off with AutoZone. And the reason that happened had nothing to do with AutoZone. The news came out on late June, I think it was June 29th, from another auto parts manufacturer that sales were below expectations. And that news hit all auto parts manufacturers and AutoZone in particular because they're the largest. So people just sort of said, oh, that's a bad sign. And they dropped back. But now you see that AutoZone is trying to resynchronize with the S&P. And one sign that that's true is, look here, the rest of the market is down today significantly, but AutoZone is up a little bit, not compared to yesterday, but for the day. And that's a good sign that AutoZone is trying to resynchronize. Now what I'd like to do is draw your attention down here to this market forecast window that you guys almost always see me having open. And we see the intermediate forecast line. It was following the NASDAQ and the S&P drifting down and then coming up. But when we had that dramatic sell-off in auto parts manufacturers, we came down. And you can see here, we're starting to reverse that trend. And I like these trend reversals because they give us an opportunity to trade the reversal, right? Because stocks tend to, when they do a reversal of the intermediate trend, that trend tends to continue until you hit the oversold line or the overbought line. So one's expectation here, it's not always true 100% of the time, of course, but one's expectation here is that as this intermediate line reverses, that AutoZone will continue to go up until the intermediate forecast line hits the overbought line up here. So here's an opportunity to trade. Let's look at some of the things that we look at always when we're doing trades like this. Let's look at the volume for the reversal. Volume is not great today, but it was pretty good yesterday, which was when the reversal really happened. So, volume has been so-so, but sometimes we have to apply some logic to this. This is the 4th of July week. A lot of traders have taken days off. So volume on the market overall has been lower the last few days than it might normally be. So even though these volume lines are not really high, they're sort of average volume lines for this week. Those are actually pretty good volumes for an individual stock. So what else do we want to look at? We want to make sure that there are no earnings announcements coming out. AutoZone did their last earnings announcement when? It looks like, why am I not seeing the date? May 22nd. So we're in no danger. They haven't announced when their next one's coming out. So we're in no danger of AutoZone making an earnings announcement during this trade window. So that's one of the things that we look for. We don't like to make trades during earnings announcements, and it is an earnings season right now. It's just that AutoZone is later than most in doing their earnings announcements. So that's a good sign. Now let's go. So we have an opportunity to look for a bullish position in AutoZone. So let's go ahead and look at the Analyze window here, and we'll pop up AutoZone, and we'll look at the option chains. AutoZone trades in a $10 window because it's such a highly valued stock. So in order to get a 10% return on our investment, we would need a 90% or a 90-cent difference between the ask and the bid between two different stocks. So I look here, and it looks like that opportunity might exist around 350. So let's look at a vertical. So we're looking at a bull put spread in this case, and it's 85 cents. So that's pretty close. Let's look at what the risk profile looks like for that. So you see that you're getting an $850 return on a $915 investment, or a $9,150 investment. So pretty close to a 10% return. Not quite as good as I would like. In fact, I looked at this trade before making this video, and it was 90 cents, which made me a lot happier. Let's look at the probabilities for the option chain for July. So that's going to expire in 2 weeks on July 20th. I like a lot the fact that we're looking at a 2-week window, because that means that time decay is working in our favor, which is cool. And you can see that the probability of this trade expiring below the line of our window, which is 350, is less than 20%, which is our target. It's 82%, so that's a good sign. One of the things that we want to look at is that trade window also below support for that stock, and is it below the Bollinger Band for that stock? So let's pop back over to the chart window, and we're looking at 350, right? So if I were to put this trade on the chart, my line would be here at 350, and you can see that support is here at 335, right? The last reversal, actually it's pretty strong support, because there was a reversal at 355 here, and then again at 355 here. So there's pretty strong support at 355. So we're 5 points below the support line, and nicely we're also below the Bollinger Band. So that's a good sign. So both of those indicators are telling us that this is a nice trade to make. Things I don't like, so counter trends, I mentioned earlier that the volume's not as high as I would like it to be. And also, we never went below that oversold line. So it's possible that this is, a pump fake. It's going to come up and then it'll come back down again, because we never went really into the oversold area. But if I look back over the past 6 months, we're looking at a 6-month chart here. It's never been in the oversold area. Even last time it came down, it touched oversold, but never went into it, reversed. So overall, I think this is a good possibility for a trade. And because it's a $10 window, I'm going to reduce my exposure a bit and back off to just 5 options. So maybe even a little lower. Let's back off to 3. So that gives me a $3,000 exposure, a little less than that, and a potential gain of $261 in a little less than 2 weeks, or a little less, exactly 2 weeks. So that's a good possibility. I'm going to go ahead and try to make that trade. So we hit the confirm and send button, and it went through right away. So that's a good sign. So that's my trade for this week and the reasons for doing it. Hopefully that was interesting for you guys. Feel free to post questions. And again, these are not meant to be recommendations for you. Your situation is different than mine. This is just purely for educational purposes to give an example of the kinds of trades that I make and the rationale for those trades. So that's it for today. Happy trading, you guys.